Coming back to some breaking news that we're just getting, the Reserve Bank of India has released its financial stability report, and this is the 14th report that the RBI has released. Not just that, they've also released the report on the trend and progress of banking in India for 2015 and 16. We'll take a look at the details with Lata Venkatesh and Ritu Singh in just a bit for now, but just going at the highlights. In fact, let's go across to Ritu. I believe she has the highlights from that stability report. Ritu, what have you managed to peruse so far?
Well, it's a very, very lengthy document, and therefore 5 chapters we're expecting. But of course, the key highlights will be the performance of the banking sector. Remember, the Financial Stability Report is a biannual report which really tests the resilience of banks. So here, so the key figures are thus: the gross NPA of all scheduled commercial banks have increased to 9.1% in the September quarter, that is as of September 2016, compared to 7.8% as of March 2016, which were the last figures published in the June Financial Stability Report. Clearly, the overall stress has increased, and that is obviously not a surprise at all. The overall stressed advances ratio, which, remember, I believe stood at around 11.5% for the entire system, that has also increased to about 12.3% as of now. The last figure, of course, was 11.5%, and these are the latest figures as of September 2016. The large borrowers also registered a significant deterioration in asset quality. Again, the trend that we have been seeing, bulk of the NPAs coming from the corporate sector, and that to the top 10 large borrowers who have the maximum contribution. The stress test, which is a key part of this report, which really tests how strong banks are, that of course shows that the GNPA ratios of all banks have increased further under the assumed baseline scenario, which is the best case scenario also. It shows that banks are now more at risk than before. The public sector banks have recorded the highest GNPA ratios and the lowest working capital risk weight assets. Asset quality of scheduled urban cooperative banks has also deteriorated. So bad news all around, actually. There'll be more, and we'll bring you more updates as and when. But Aditi Nair, the principal economist at ICRA, joins us now. Aditi, thank you for joining us. We're still going through this report, but of course the first number that springs up is the performance of the banks, and no surprises there really. The gross NPAs and the overall stress advances ratio has worsened significantly.
Thank you. I'm also still going through the report, but certainly that is a number that was largely expected, that there would be a deterioration as far as the GNP and the stressed advances ratios were concerned. So no major surprises there. A couple of the other minor things that I've been able to pick up so far. First of all, the impact of the note ban in the short term has been described as momentary. There's a comment on concern related to remittances as far as the current account deficit is concerned. And I think there's also been a comment on how capital flows rather than trade would have a bigger impact on the exchange rate. So I think as far as the macro number, commentary is concerned, these are 3 of the most significant things that I've been able to see so far.
Right, Aditi, if you could also highlight for us, nothing so far I've read in the report that talks about demonetization per se. So obviously, once that is also factored in, do you think, because this latest data is only as of September, by December, if you're talking about, it could be actually a lot worse than reported in this?
You mean as far as the stressed assets is concerned?
Absolutely, yeah, the gross NPAs.
So I think there could be some further worsening as far as the stressed assets is concerned, partly also because the focus of the banks in the last month and a half has really been shifted towards implementing the note exchange in a sense. So I think to some extent that would definitely have had an impact. And overall, we have to wait and see how much of an impact there really is on corporate own earnings and their ability to be able to service the debt that they have post the note ban. So we obviously have a lot of anecdotal evidence right now, and we're trying to sift through that to really see how much impact there has been on different sectors. And there would be obviously some concomitant effect of that on the ratios that you're talking about as well.
Right. Aditi, just hold on for a minute. We're also joined by Rupa Rege of L&T. Ms. Rege, your first thoughts on the report, much on the expected lines, worsening in general across the board as far as asset quality is concerned?
Can you just share with me a few highlights, because I have just stepped out of a meeting.
Sure. So the report says as of September 2016, the gross NPAs have increased to 9.1% compared to 7.8% in March. It says the overall stressed advances ratio has worsened to 12.3% versus 11.5%. It says the overall macro stress test also shows that scheduled commercial banks have come under further strain even under the baseline scenario. So those are some of the performance and risks related highlights of the banks. We're still going through the rest of the document, but of course your first thoughts, mostly on expected lines?
Yeah, this is very much along the expected lines, because if you look at some of the good investment firms' reports, then it is revealed that, many companies which have interest cover less than 1, their share has increased now to 40%. Right. And stressed assets belonging to power, steel and telecom have increased significantly in the second quarter. So I think the numbers put out by Reserve Bank of India are very much in line with what we had seen through corporate earning results.
But, at this point, it's saying that, of course, domestic risks to banks, and there's, of course, the bigger risk that is the macro, global risks. It's talking about Brexit. It's spoken about, the outcome of the US presidential election. What at this point do you think, is it more domestic risks that Indian banks are going to face in the next quarter or so? Or would it be the play out of, the global risks that will really, determine how bad or good the profit levels would be?
I think it will be equally important, both the global and the local factors, because we have seen some short-term disruption of economic activity post demonetization. So that may have, stresses on the MSME or agri NPLs of the banking industry. But there will be cyclical recovery going forward. But then, you see, global factors will be instrumental in influencing RBI's monetary policy stance, and that has bearing on cost of borrowings for the banking sector as well as financial companies. So from that perspective, I think global factors would matter. Another thing is rupee, because we are seeing that the country had seen a lot of outflows from the debt market in the month of November and December. So if globally interest rates start hardening, then and if that results in more of outflows, then rupee will also come under pressure.
Aditi, before we wrap up, just one quick comment from you. The report says that in the financial year 2016, FY16, the profits of banks across banks, public and private sector banks, profits plunged by 60%. A quick take from you on what can be expected in this year, given that a lot of banks have suffered on account of demonetization as well.
Yeah, I don't think we're going to get very good news from basic profits as far as the banking sector is concerned. But certainly, there could be a situation where the treasury profits of some banks may go up, because what we've seen is a plunge in bond yields, and that, of course, means that the bond prices have gone up. So if the treasury operations have been managed in a successful manner, then certainly we could see treasury profits being better in the current quarter. But overall, I don't think we're going to see, too much of an improvement in profits. To some extent, because the deposits have gone up, and they would have been invested in either, absorbed by the RBI under the LAF or under the cash management bills, etc. The net interest margins on an absolute basis may be somewhat higher. So I think that could also protect things a little bit in Q3. But otherwise, we're not expecting to see any major improvement as far as the bank's profitability is concerned.
All right, Aditi and Ms. Rege, thank you so much for joining us. Areeb, so just a quick few highlights. Of course, the gross NPAs and net NPAs for the scheduled commercial banks on a whole, without a surprise, of course, has worsened. In fact, the Reserve Bank of India report also talks about the withdrawal of, 1,500 rupee notes, where it says this withdrawal could potentially transform the domestic economy. It's actually a positive note, notwithstanding some inconvenience to public, of course, and the momentary adverse impact on growth. So clearly it's saying the impact won't be long term. It is very short term, but of course going forward from here, at least as far as the asset quality picture is concerned, it's set to worsen.
Right, Ritu, absolutely. In fact, from whatever I can see in the report, at least as far as banks are concerned, I cannot find any silver lining. I mean, the asset quality seems to be low, and as far as the assumption of the RBI is concerned, it only will get worse going forward, and that seems to be a big concern. But thanks so much for joining us.